Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news you need to know ahead of the Wall Street Open. Coming up, the Fed countdown is loud. The Fed set to hold rates steady, so it will be its path ahead, or rather signals of its path ahead, that will be key. Meanwhile, US strikes continue to dominate the headlines. The UAW preparing for more strikes as there is no deal yet in sight. And a last-ditch attempt by Google to try and overturn the EU antitrust fine. We'll tell you more details later in the show, keeping an eye on Alphabet shares for you as well ahead of the open. Now, good afternoon, a warm welcome to this new edition of Beat the Street, not long before Wall Street starts trading. This is how equity markets are looking as we count down to the Fed. It has to be said that stocks are set for a muted open with the Fed firmly in focus, but the ongoing rise in global crude prices are also starting to worry investors heading into the colder months. We do have a few sets of breaking news data just trickling through the platform right now. Getting you across the US ones first. The building permits number for August, we were expecting 1.4 million. We got 1.5 million. So surprise on the upside. Also keeping an eye on CPI, so inflation figures out of Canada. We were expecting for the year-on-year figure for August, 3.8%. We got 4%. And on a month-on-month figure, the poll was for 0.3% and we got 0.4%. So expectation was slightly lower. The actual number was slightly higher. This was pretty much expected. And what is also key with that Canadian inflation number is that it adds to the fuel, adds to the expectation that inflation pressure rather in North America. Canada's annual inflation rate surged more than expected to 3.3% back in July. So this new measure will only add to those concerns that perhaps the Central Bank of Canada will have to start clamping down on inflation once again. Of course, the big set piece is the Fed. The two-day meeting starts, of course, on Tuesday, with officials widely expected to keep rates on hold for now. But also, they could flag in their new economic projections whether or not they feel that rates need to rise further before the end of the year. Certainly on the markets, especially equity markets, and also in oil and other commodities, there is this rising concern that perhaps rates will have to stay longer, higher for longer, to keep the inflation demons under control. Just a brief reminder of the timings for you. The rate decision will be released at 2 p.m. EDT, that's 1800 GMT on Wednesday. And then Fed Chair Jerome Powell is scheduled to hold his press conference at 2:30 p.m. to discuss the decision further. Now, ahead of the Fed, IGTV's Chris Beecham has been watching oil and the dollar.
Continued rise in the US dollar over the past 2 weeks has been one of the main talking points for markets as we head towards tomorrow's Fed decision. And that has driven really a lot of weakness in currencies like the euro and the pound, which does help European markets in the shorter term. But certainly I think the risk is that we get a slightly more hawkish Fed tomorrow's meeting. Of course, the rise in oil prices, which continued this morning, is the other big story. The two massively interlinked. The fact that oil has been so robust in the face of the rising dollar is also, I think, a sign that we will expect prices to keep rising and indeed demand to remain relatively strong into the end of the year.
Thanks very much, Chris. Of course, the central bank action does not end there. We also had the RBA updating on its minutes. The Australian Central Bank did consider raising rates by 25 basis points, though the case to hold was stronger as recent data did not materially alter the economic outlook. Just showing you the Aussie dollar versus the US dollar there, the pair extending its sideways consolidative price move during the earlier in the session remains confined in a familiar trading range held in the past week or two. Let's just give you a weekly weekly chart there just to show you a difference in the trend. That's the weekly chart for you. But as you can see, it is still range bound in the last few weeks. We've also got the Bank of England on Thursday. That's the big event in the UK and potentially a market-moving event for sterling. Economists are expecting the Bank of England to raise interest rates again by another quarter point, perhaps in a further bid to fight inflation. Of course, a lot of the mood music this week will be surrounding the Fed. We didn't see much of a move after those RBA minutes on the Aussie dollar versus the dollar either. But for the Bank of England, there could potentially be a move there in terms of rates. Earlier, I caught up with LSEG's Dewi John and asked him if he was expecting any surprises from the Bank of England.
Well, always expect the unexpected, but not in this case, I don't think. I think it's likely to be in line with consensus, 25 basis increase. The reason for that is the bank is itself in a bit of a bind and has to be seen to do something, I suspect, even though that something may be the wrong thing. There's a well-known quote from Ben Bernanke, of course, that says that when the central bank's job is to take the punch bowl away before the party gets started. The problem this time, of course, is there is no real party. That on the flip side, we've got sticky inflation that's persisted longer than anybody's expected. The bank has to be seen to trying to choke off.
So Bank of England Thursday, Fed decision on Wednesday. Ahead of that, focus also on those strikes, the UAW continuing with their strike action, and the latest being that they will announce on Friday more strikes affecting more US plants if no progress is made with the Detroit 3. This is Ford, GM, and also Stellantis. The UAW president, Sean Fain, adding, "We're not going to keep waiting around forever while they drag this out. We are not messing around," is a message. Just taking a look at Ford's shares for you to see whether there is a reaction today. A lot of this is already factored in. Let's have a look at the hourly chart, as this is an all sessions stock on the IG platform. There you have it. You can see it moving progressively lower, but it is sort of stuck in the doldrums here until we get more details of potentially more strikes or a deal. But at the moment, I can tell you that there is no deal just yet. UBS Global Wealth Management has looked recently at the potential hit if this continues. Just taking a look at GM's shares there for you. UBS Global Wealth Management saying there are some implications for equities. If the strike drags on for many weeks, there's only a small reaction at the index level because Ford, GM, and auto suppliers collectively have a small weight, less than 1% for the S&P 500. But within the tech sector, analog semis have the most exposure. And within industrials, rails, and a few capital goods companies have some exposure too. Those comments coming from UBS Global Wealth Management. Speaking of strikes, I also want to update you on Chevron. The strike action at Chevron's Australian LNG export facilities continuing to hang over the market, says Daniel Hines, senior commodity strategist at ANZ Bank. This comes as Chevron has said that it is maintaining supplies even as workers escalated the strike action to 24-hour stoppages over the weekend. It remains to be seen there as well whether there is any deal just yet. And last but not least, we do have Instacart, this IPO that everyone's been saying heralds the return of the IPO revival, especially after a 2-year drought. Maple Bear, the parent of grocery delivery app Instacart, has disclosed that it fetched a $9.9 billion fully diluted valuation after pricing its initial public offering at the top of its indicated range. Now, this IPO raised $660 million based on 22 million shares sold, and the shares are scheduled to start trading on the NASDAQ. The offering, as I mentioned earlier, is the latest sign of the US IPO's market rebound. We've had numerous other companies, Arm, Cravio as well, and another drug company in the last week announcing IPOs. And Google, one of the big stories and the stocks that we are watching Alphabet for you. Alphabet, of course, being the parent company of Google. Just showing you the all sessions picture here on an hourly basis. Currently, on an hourly basis, Alphabet down some 0.3%. Watching this for you because they are making a last-ditch effort at Europe's top court to overturn a 2.4 billion euro EU antitrust fine imposed for market abuse related to its shopping service, saying that regulators failed to show that its practices were anti-competitive. Now, if it fails to overturn this, the fine is $2.6 billion US dollars. So 2.4 billion euros, that's $2.6 billion dollars. And before we go, let's have a last look at how the markets are looking. This is Wall Street on the IG platform. Quite a tepid, cautious signal there indicated ahead of the open. However, all this could change depending on what the Fed does and says in the coming 48 hours. And that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.